Asia. And even in Asia, there is a great amount of lockdown that's happening. Their revenue is now going to shoot up. Okay. Hi guys. So welcome to the session on financial statement analysis. Okay. Hi guys. So welcome to the session on financial statement analysis. Rather financial statement, understanding the financial statement. This is what we are doing today. So we're going to start with the introduction of financial statements, which is today we're going to do one of the important financial statement that's going to be income statement. Fine. So let's understand what sort of income statements we have. Okay. Now, when I talk about income statements, right? We talk about income statements. So there are two types of income statements. One is basically what we call it as, let's just say, income statement, which is single step. Okay, single step sort of a income statement that we call it as. And here it is a good example. So if you look at your statement out here, how does this statement look like? So in this statement, the only thing that you see here is revenues. That's number one. So you can see revenue out here. And the revenue is like, we have taken the example, merchandise sale as 24,800. So it's sort of a hypothetical example. So it's sort of a hypothetical example. Okay, just to make it very clear. So we have this company, Paul's Guitar Shop Incorporation, right? So revenues, basically it's a merchandise sale. So they got 24,800 from there. Music lesson income, which is 3,000. Now, understand this thing out here is actually revenue, but you also need to understand at the same time that, as we discussed earlier, right, that revenue are coming from both the aspect. Rather, the revenues are going to be from which is the product that you're selling. So that's going to be your main product. That's going to be your main product. That's what you have. And music lesson income. Music lesson income. This is going to be other income. But again, what they have done is they have clubbed it together, and that's 3,000. Total revenue that you get here is nothing but 27,800. Fair enough. Now, if you look at here, then you have all the expenses, right? So expenses, which is 10,200, right? This depreciation of wage expenses of Now, when you have a financial statement, which is nothing but revenue, okay, minus expenditure, or you can say expenses, whatever, that's going to give you a profit, right? So this sort of statement is basically called as a single step financial statement. Okay, this sort of statement is actually called as single step financial statement. Okay, so what you have in the end is net income. So this is what the single step financial statement would look like. Now understand this. These statements were earlier sort of um, used. Earlier they were used. Now nobody uses it. To be very honest, nobody uses it. It's just that it has now become outdated. So this is something you can use for personal sort of a thing, right? For a personal thing, you can use it. As I said, like yesterday, that if you are somebody who is making your own statements, right, then you can probably use the, okay, what is going to be my total expenses, what's going to be my total earning. I hope I give you the example of one of the faculty, that the way he earns, or one of the salaried person, the way he earns, right? So like that. Once again, those who did not come yesterday, those who did not join lecture yesterday, for them, once again. For them, I think it's going to be new. Those who actually were there yesterday, for them, it's going to be sort of a revision. Okay, let's try to go live on YouTube. We're going to kind of do 15 minutes a session over there. We'll continue with you. Okay, fair enough. Let me go back to the PPT. Okay, have a look at this. Have a look at this. And tell me, whatever I taught you yesterday, tell me on that front, what's the difference between these two statements? What do you see? What's the difference? क्या difference है? I'm going slow because of because of engineers. Okay, fair enough. So if you look at what do we have here is nothing but single sort of a multiple statement that we have, right? So this is nothing but, you can call it as, it's a multiple statement. So financial statements are of two types, as I said. So this is going to be multiple. Now what happens in multiple is basically whenever you talk about, so if you look at the single statement, looks like this, right? Now, as I said, as I told you right earlier, it was like used by the old sort of a pattern of income statement usage, right? Now, for the fact companies are global, they have business, the business has now expanded, right? Because of which they use, this is something called as multiple financial statement. Now, what makes multiple financial statement a little different? Okay, why do we need multiple financial statements now? We need it because we want to bifurcate. Okay, we want to bifurcate expenses in a proper way. Okay, we want to bifurcate expenses in a proper way, because let's just say if you're a person who's salaried, right, the way company earns revenue, you are earning salary. Okay, so you got a salary at the beginning of the month, or let's say at the end of the month, whatever. So when you talk about your salary, let's just say you've got nothing but, let's say, 1 lakh rupees. Okay, now from this 1 lakh rupees, you have a lot of expenses that needs to be incurred. So you might have house expenses, you might have luxury expenses, you might have entertainment expenses, right? So in a simple statement that we saw, we have this salary, and then you can just put in all your expenses at a one shot, and then you can say that, okay, what is my let's say gross income? What's my gross income? What I have at the end of the day in my hand. Okay, so this is what your sort of a single state financial statement would look like, which is like raw, only 2 or 3 headers: revenue, expenses, and net income. Here, then you would say that, okay, as a company or as a person, we would love to see the bifurcation. We would love to see the bifurcation in the sense that we want to have in-depth understanding of that entire income statement. So number one, as a company, you have sales. Now, understand this. In Indian terminology, in Indian companies, all the Indian companies would put it as sales. But the moment you talk about accounting standard, which is IFRS, International Financial Reporting Standard, when talk about IFRS, IFRS is one of the reporting standard. IFRS paper, I'll take different lecture. There's going to be a total different lecture altogether on IFRS. So, couple of I would say accounting standards, which are like predominantly world renowned. We can say that we start with US GAAP, which is the sort of a full form of GAAP is nothing but generally accepted accounting principle. You've got US GAAP, you've got UK GAAP. Likewise, you've got IGAP, which is nothing but Indian generally accepted accounting principles. Getting the point? So this is what you have as far as IGAP is concerned. But now everybody said that, okay, we don't want GAAP and all that, we just want IFRS. So when you look at companies, I'm also going to show you a couple of live examples today. So IFRS में क्या होता है, or other US GAAP, UK GAAP, all the foreign companies, they'll put it as revenue. But in the Indian companies financial statement, you will see that it is written as sales. Getting my point, right? So you've got sales. Now, then you want to do the bifurcation, which is operating expenses. Okay, you've got operating expenses. Then you have operating income. Then you have non-operating or other whatever expenses or revenues. Now, how do you bifurcate this? So I'm going to tell you a couple of things. So let's just say you as a person, let's take one person for example. You as a person, you earn a salary, okay? And at the end of the month, you want to now do the bifurcation. You know what? I want to check my all expenses. Where did I put the money? Okay. So what you're going to do is you're going to have your salary, which is nothing but let's say 1 lakh. You started with 1 lakh rupees. Okay. Now, what you're going to do is you're going to make headers. You're going to make headers. So headers are going to be household expenses, header number 1. Okay. Number 2, household, maybe if you want to kind of bifurcate, we can bifurcate that. Grocery, let's say toiletry, right? Let's say whatever, like anything, right? Uske baad you can add in entertainment expenses. Okay. Then you can add in medical expenses. Okay. Then probably miscellaneous. Okay. Samjha? Simple si baat. So what happens when you are going for multiple state financial statement? It actually helps you. It actually helps you to kind of understand your expenses and your income properly. Getting the point? Now this is what exactly is happening here. So company says that, you know what? I basically want to kind of bifurcate this. So I have revenue, which is let's say XYZ amount. Okay, but I want to understand how much money I incurred to make this revenue. So that's called as cost of goods sold. So you are a product-based company, you have produced certain goods, you sold them, you make some revenue, right? But to produce those goods, let's say yesterday I gave an example of like Apple Pencil, right? So that is something is called as cost of goods sold, right? This is going to be the main expenses because you are selling the product and you are making money out of those products, and that's why you say that sales minus cost of goods sold is going to be nothing but gross profit. So I now have a gross profit. Fine, I now have a gross profit, which is 25,000. Just an example. Just an example. Okay. So we're gonna go with this. Just an example over here. Fine. Now from this, as a company, I do bifurcation. Okay, what are my operating expenses? Because see, you have produced these products and you have all these products with you. But again, you have certain operating expenses also, which are again bifurcated in, let's say, selling expenses, advertising expenses, commission, administration, so on and so forth, right? So all these are going to be the operating expenses. So your total operating expenses, if you that's nothing but 13,000. So 25,000 is what you earn as a gross profit. Getting the point? Then you kind of minus You deducted all your operating expenses. Now you've got 12,000. That's your operating income. Okay. Then you have non-operating or other income, which is, again, in Indian standard, you can have non-operating. It means if you look at the headers, interest revenues, gain on sales investments, all the income that you got it from different earning resources or earning sources. Getting the point? So you will have total non-operating what? Income, right? Now here you might want to put loss also. Here you might want to put loss also. Okay. So expenses minus loss, you will take the total, that's 6,000. Whatever is left is your net income, which is 18,000. So this is what you need to understand. Okay. Now here, couple of things are missing. And the major thing which is missing is nothing but taxes. Okay. So as a household or as a salaried person, right? You put in your salary minus all the expenses. Let's say salary is like 1 lakh, whatever, and expenses are like say 50,000. This is your net income, which is nothing but 50,000. Okay. Now you might say, okay, sir, there is something called as TDS. Whatever salary that we are getting, that is net of TDS, right? Tax deducted at source, right? So whatever salary that you're getting is net of TDS. But I'm assuming that this salary is not net of TDS. This salary is basically your gross salary. Okay. And then what happens is that you actually subtract you deduct your tax, which is, let's say 5,000 is your tax, right? 5,000 is your tax. 5,000 is your tax. Let's just say for that particular month or whatever, and then you realize that okay, 45,000 is what is my income in hand after all the expenses, right? Now this is something called as disposable income. I am teaching you this. It's a part of personal finance. ये आप करोगे if you are somebody who is doing some program, CFP, Certified Financial Planner. So CFP में आपको पढ़ाया जाएगा disposable income. What do you mean by disposable income? Disposable income means an income or amount of income which you can use for yourself now. Fine. So this is what happens in the case of salaried person. In the case of company, what you have is net income, but that should be after considering the taxes. So what is missing here is nothing but taxes. Now, let's understand a couple of things. Now, I'm going to kind of show you, let's just say, let's take Apple example. One second. Okay, I'm going to show you Apple car. Okay, so here we have Apple car financial statements. That's what I'm going to show it to you very quickly. And the reason that we need to do this is because it's quite unique and there are certain things that we can learn from this. See the PDF now? Can you see the PDF here? Okay, understand this income statement that I'm showing today, this one out here. Okay, this income statement is 10Q. Okay, this statement is 10Q. Now, how did you get to that statement actually? So let's understand how did we get to that statement actually. So I'll show you how did we download, and I also want to kind of show you that how you can actually because there are certain income statements, and there are certain filings that people don't know how do they come and all that. So I'm going to show that to you, that what sort of filings are required. Okay. So whenever you go on any company's website, right? What we did yesterday, we talked about Apple, and I showed you whatever they are actually filing. But there's one point that we missed yesterday, which I wanted to cover today. So what you're going to type in Google, Apple Investor Relations. Now my question to you is that why we are typing in Apple Investors Relations? Come on, quickly tell me the answer. I told you yesterday. Why we have to type in Apple Investor Relations? What's the reason behind that? Why do we do that? Why do we do that? Okay, so definitely now you can see my screen, right? You can see Apple got this thing. So all the product-based companies, Microsoft ho gaya, Amazon ho gaya, Apple ho gaya, you will not be able to get their financial statements very quickly. But when you talk about Apple sort of a company, um, investor relation is sort of a kind of a a tab hota hai. That's one thing wherein you get all the statements. Then you click on SEC filings, Security Exchange Commission. I explained this to you yesterday also. Fine. So SEC is there. What I have to do is, now here is the crux. If you look at all filings, right? Now understand this. When you talk about all filings, this is where you get to know what all things company is actually filing with Security Exchange Commission. Now, annual filings, quarterly filing, current reports, proxy filing, registration statements, section 16 filings. Now, this is something is useful for all the finance folks, right? But I can understand how does it really differ. Look at all filings. When you talk about all filings are going to be there, but this is not required by every person out there in the market. If you're a if you're somebody who is a financial analyst or equity research analyst, or maybe if you're somebody who is working in private equity, venture capital, investment banking, whatsoever, the main thing which is required for you is annual filing. Okay, annual filing may be did for the fact like foreign companies, their annual report is called as 10K. Their quarterly report is called as 10Q, which we are doing currently. It's there. So the quarterly filings will be called as 10Q. Now, understand this. What is this proxy filing? We talked about this yesterday. Now, what is proxy filing? Proxy filing is basically, this is something you were not taught in the B school, so I'm going to give you guys an idea. Now, why do we need proxy filing? Again, there are a lot of accountants out there, CAs, CPAs, CMA and all that. Not necessary that you will be using this thing, but as a financial analyst, you got to use this. I'll tell you why. When you talk about proxy filing, right? If you take the PDF of this is the proxy filing by Apple itself. Proxy filing shows definitely it's something that is coming from the companies that if you're not able to kind of go for the meeting, you can have your representative. But here, what happens is this proxy filing here is basically gives the agenda that what are we going to discuss in the upcoming meeting, and this is one of the important document for your shareholder also. So all the public limited companies in the world, they have to do the filing with SEC. In India, they have to do the filing with SEBI, right? So all the companies in the world, when you talk about the global companies, right? When you get a job in the investment bank and all that, this is what you will be doing. So you'll be kind of dealing with this sort of SEC kind of documents. So this shows that what we're going to discuss, what is going to be the agenda, and if there is any sort of a special item that they really want you to kind of they really want to let you know, maybe sort of what's going to be the bonus this year that they're going to issue, what sort of going to be the let's just say compensation of your C-level kind of an executive. All these things will be kind of mentioned in here. So proxy document is one of the important documents from the perspective of financial analyst. Now, why is it required? It's required because you as a financial analyst, when you go there, go where? On the analyst call. That is something we're going to talk about later. When you as an analyst, when you sit down there and when you listen to all the C-level, CEOs and CFOs and CXOs, as an analyst, you have your own questions that we want to understand why the company is not doing so good. I'll give an Indian example. Let's talk about ITC. Okay, let's talk about ITC. ITC shares are not doing really good. As an analyst, you can ask them that in the period of COVID, right, where all the FMCG companies are doing very well, why you guys are not doing well? Your share is not trading at 197. Right? That's very low from your 52 weeks and all the stuff. In the same way, you can talk to Apple. You can ask Apple that why your share prices are still going up. What is the reason? Because if you look at your products are not being sold in the market because of the lockdown overall, and you don't have iPhone 12 manufacturing yet started because your plants are in China and your representative, your engineers really cannot travel there. What is making your share price should move the ladder up? You're getting the point. But now it's today it's down by like what? 32 cents. That's that's nothing. That's minimal. Okay, we can look at the share price. So all these questions that we can ask them, in the analyst sort of meeting. At the same time, proxy document is on the baat kari, that actually helps you to understand. Look at this. Look at the agenda of this entire document. Role of board directors, board committee, annual board, everything. It's an 89 pages ka document. A lot of institutions, they will not teach you this, and that's what the problem is. It's quite important that you need to understand before even you as an analyst, you might be, see, so there are three things that we need to understand, guys. Number one is where you are working as an analyst. Doc not visible. Okay, let me make the doc visible. Okay. Fine. So I was saying the same. I was saying this as an analyst, right? Whenever you analyze a company, right? So you might be getting a chance to kind of get into the company's meeting, or you might not be getting the chance to get into the company, whatever it is, right? As an analyst, you need to have your facts in place. Fine. So let's just say you're a third person, you're a broker, okay, or you're working for a broker, or let's say you are in-house financial analyst, wherein you don't have the opportunity to kind of go and sit for the meeting, or talk to all the C-level people, right? Then what you can do for your analysis, these sort of documents are quite important, and that's what we do not do. That's the biggest mistake that all the students out there, all the financial analysts, they don't look into all these documents. These documents are Bible for you. If anybody who takes care of these documents can tell you to understand the nerves of a company, to understand the basic of a company. Understand this, there is this one point out here. If you can see, this is called as stock vested 2019. 2019 May, whatever employee stock options, those who got vested matlab, I'll explain the employee stock option ka matlab kya hota hai. All these are shares that all your CXOs and vice president, CFO, they're going to exercise. It means all these employee stock options are now going to get converted into actual shares in the market. That is required. Now there is something called as Edgar filing. I'm not sure if I can type in here. We'll talk about this Edgar filing in the upcoming sessions, but this is what you need to understand as far as your once again company's financial statements are concerned. So this is quite important. Fine. SEC filing mein chalte hain. Let me know if you can see it in my window. I am on Apple's SEC filing. Kindly tell me if you can see the window. Okay, fair enough. Now look at the all filings. What do you have? You have section 16 filing, one of the most important documents for financial analysts out there. One of the most important documents for financial analysts. A lot of people don't check this. I think CFA covers this sort of thing, but not in detail. Section 16 filing kya hota hai? Section 16 filing is very important. Now, if you look at section 16 filing mein kya dikh raha hai aapko yahan pe? Can you say name of all these people out here? Can you say name of all the people out here? We have all this O'Brien. You have seen these guys. Couple of guys you have seen at the time of Apple car opening. When Apple launches new product, you have seen these guys, right? You have seen this O'Brien and all that, right? Now, who are these? These are like all big shots from the company. Now, what happens is your form filling 16 gives you an idea that how many shares your directors are holding. How many employee stock options your directors are holding? All the top-notch executives are holding. This has a great impact on your financial statement. We will be covering that in ESOP का lecture. Excuse me. एक ESOP का lecture होगा जहाँ पे हम ये चीजें cover करेंगे. So this is what you need to understand. This is what you need to understand, that whatever we are doing out here, this is a real life sort of a knowledge, right? So whenever you talk about all the executives, and we will also be talking about case studies जहाँ पे for their own purpose. See, because if you are a director of a company, or if you're a CEO of a company, you're getting my point, right? I'll kind of cover this case study today itself. let's just say you're a CEO of a company. I'll give a great example of one of the top-notch investment bank. That's called as Lehman Brothers. Excuse me, Lehman Brothers, or something to do with the Enron, right? What happens eventually? Why insider trading is important. So, number one case study. Excuse me, Elon Musk. Okay, what did he do? One fine morning, he comes on Twitter. He tweets saying that he will be taking Tesla privately. Okay, he'll take Tesla private. Okay, or something, some news he wrote it over there, and that news was amazing. The moment people saw it, they were like, oh my goodness, this is a great news. Something is going to happen in the company. let me buy shares. So let's just say Tesla was trading at $100 hypothetically. If Tesla was trading at $100, Tesla kind of went to like $150. Fine. Now what like whatever he did, was it correct? That was not correct. Why? Because when you are a sort of a company, when you are a public company, right? And when you're coming on Twitter and you're saying that, okay, something is happening in the company and people want to take that advantage, that is called as insider trading actually. And he was booked for that thing. SEC booked charges against him for that. They said that you manipulated your stock price, because what these people feel that as a director, as a CEO, if I'm holding the biggest chunk, the major chunk of my company's shares, right, and if I go in the market and make a news about it, right, what happens eventually is that the share price shoots up drastically. What I can do is then I can download my shares. So I have shares currently. Let's just say currently Apple is trading at $320, right? Right? Whatever the CEO of the Apple, right? Mr. Cook, right? Whatever. So let's just say he comes up with the news saying that okay, we have this time and blah blah blah, and we see the profit to go up by 150% up. People get amazed by it, and they feel that okay, the company is going to do a fantastic job. So what they do is they buy company ka share fatapat se, and that's how the price shoots up. So what happens? $320 becomes around about $400. Let's say in 2 to 3 days ka time, and then if Tim Cook kind of let's say download all his shares, download in the sense start selling off all his shares, then he's making around about $80 per share. And all the CXOs, all the C-level people, they have major chunk of shares with them. That's called as insider trading. That's called as something not legal. And this is what you can see in Form 16 filing. Form 16 filing, you have to file it with SEC. Tell them that I have these many shares with me. I have these many employee stock options with me. There is a part that's called as Edgar also. When I was on Wall Street, I was working for one of these clients, and this is what we should do actually. That's where I'm coming from. That's what I'm telling you, right? That's case study number 1. Number 2, Reliance. When Reliance share on 23rd or 24th of March touched the 52-week flow of 870 rupees, right after 2 days, if you see the news, the majority of their promoters or founders, अपना मोटा भाई, respected Mukesh Ambani, his daughter, his son, wife, all started buying shares, and they bought huge amount of shares at the same point in time. Okay, they bought the shares at 870. Okay, now after that they cracked 5 deals. They cracked 5 deals in 4 weeks to get Geo on the digital marketing platform, and they got huge amount of funding. Right, we know it, right? Now look at where is Reliance. Reliance. let's have a quick example of Reliance. Okay. Okay, look at your Reliance. Let's go back to, okay, this is going to be your April, because I've been watching these stocks in so many years now. It's like by heart. Look at this 875.72 INR. What do you have today? 1470 INR. Huge upside. Huge upside. You're getting my point. Round about you have made round about 600 to 700 rupees per share. And when as a promoter, if you're holding round about lakhs of shares, per share 700 rupees you've made multiplied by lakhs of shares. Imagine how much money you're making. But they cannot download, they cannot actually sell off all these shares right now. Otherwise, there will be a kind of, people will get a little bit kind of suspicious about them that you did all these things just because you wanted to buy at low level and sell at high level. So that is the reason when you talk about all these, SEC filing and all for the companies abroad, this is quite important. So when you talk about filing, as a financial analyst, I hope now where do you have to look out for filing? Guys, is this clear? Guys, is this clear? Okay, fine. Now we will move ahead with Apple ka actual financial statement analysis, and we will do that. 1 second. Give me 1 second. Yeah, I paused. चलो, ये एक अपने पास स्टेटमेंट है और ये एक अपने पास स्टेटमेंट है. You guys can download it by yourself also. हाँ, चलो ये देखो, मुझे बताओ इसमें क्या क्या समझ में आया. I'll be right back in 2 minutes. Looking at the financial statement of Apple. Now, if you look at what's happening here, so number one thing that you need to understand is net sales. Okay. Now, Apple is saying net sales. Probably, as I said, different company will have a different format. Some student asked me yesterday that is there a format to kind of make income statement, but there's no format as such. A company can put it revenue, they want to put it as net sales, whatsoever. Okay, now why they have done this? So if you look at here, it's a 6 month ended and this is 3 months ended. So it's a quarter on quarter. As far as the Apple is concerned, I think they are following their calendar as an Indian calendar. Okay, which is September is the half year, and then sort of March is going to be the year end. This is what you're seeing here. This is what I believe. Okay, now this is what if 6 month ended, quarter on quarter. So look at this: March 30, 2019, March 28, 2020. It's a 1 year. So that's how you take it. YOY, year on year, quarter on quarter. You can look at it last year ka quarter and current year ka quarter. That's how we compare it. Okay, March 28, March 30. Okay, 44,965, 46. It's okay. So यहाँ का जो number है, this is nothing but 3 months. That's a quarterly because we are looking at the 10 cube. We're not looking at 10K. We're looking at 10 cube, right? That's a 3 month statement. Now, if you look at here, it's a beautiful statement. you have net sales, then you've got products and services, as we said. As you can see, cost of sales. This is nothing but COGS. Cost of goods sold, also you can call it as. Then you get gross margin. You have operating expenses. Then you have R&D, SG&A, right? Then you have operating income. Then you have other income. You've got income before provision of taxes. Then you kind of paid all the taxes back, and what you have finally is your net income. Now, what you have to do here is you also need to take into consideration a couple of items which are quite important as far as your financial statement is concerned. Now, what I'm going to do is, can you see the PPT? Okay. There are two things that can come under income statement. And they're quite important that you all need to understand. So number one, okay, couple of income statement you will see that you might see this sort of header, and you will see that income from continuing operations. Okay, income from continuing operations. You might have some amount out here. Okay, fine. You might have another header where you say that income from non-continuing operations. Again, some number out here. Okay. Now this is also an income for you. So when you started with your statement, you had net sales. Okay. Then you had other income, the way we had for Apple, the way we've seen. Then you will have operating expenses. Here you will have operating expenses. Okay. Uske niche you will be having operating. So you'll have expenses here. You'll have operating income out here. Okay. Fine. Uske baad you will have this income from continuing operation, income from non-continuing operation. It's quite important that a company should disclose this. Now, income from continuing operations means whatever operations are working. Let's just say there is something called as segments, or let's say companies, right? Now, I'll tell you what's happening here. There are two types of statement. Okay, one statement. Let me change the color. There are two types of statement that we have. Number one is standalone. Okay, number one statement that we have is nothing but standalone, and then we have another one which is called as consolidated. Okay, let me give you a rationale behind this. What is consolidated and what is a standalone? A standalone statement is nothing but there are SBUs. This is what you will be learning in MBA Finance. Okay, SBUs, Strategic Business Unit. Okay, let me write it for you. Strategic Business Units. Okay. Likewise, you have a lot of strategic units. Okay, and every unit is making money for you as a company. That's number one. Then you have geography wise. Okay, so let's just say Infosys, USA, Europe, India. When you make income statement, which is uh, income statement, cash flow, balance sheet. When you make these financial statements only for one company, one strategic business unit, or you may just make it for Infosys USA, Infosys India, Infosys Europe. That's called a standalone. But everything what happens gets consolidated into one final statement. So that's called as consolidated income statement. And you should always and always look out for consolidated income statement. That's quite important. So that's how these mechanism is, that we will look at every business, then we consolidate, and then we will look at the consolidated income statement. And that is what we are actually looking out here. Okay, I hope this is clear now. Now, moving back to the Apple's income statement. So if you look at here, what's happening here is whatever that you see out here, this is the total of everything. Okay, SBU is Strategic Business Unit. हर एक department को they give a name, SBU, different SBU. Yeah, it's a jargon that is used in MBA. Okay, now you can see the Apple ka statement, and that's the reason you see here. This is nothing but the consolidate. See accompanying notes. Now we'll talk about the annual report. Maybe tomorrow's lecture I'll take on the annual report. Consolidated financial statement. Right? So this is your entire income statement, which is consolidated one. Okay, EPS I'm not going to do today. EPS is something we will be doing a little bit later, because EPS is a concept altogether. That's called as earning per share. That's something we will do later. But just moving ahead with your income statement, I hope this is getting clear now. Okay, so you have net sales. Let me again go back to the PPT, which can actually give you an idea. As far as the income statement is concerned, now everything is clear. Revenue minus cost of goods sold, gross profit, okay, minus operating expenses. Okay, what do you get? Operating income. Okay, income from continuing operations, income from non-continuing operations. What do you get? Let's say we get a total operating income here. Then you have provision for taxes. Okay, minus taxes. What you get is net income. That's another. Fine. So this is going to be your entire format of your income statement. Now, I want to kind of explain you a concept called as trial balance. Okay, what is trial balance? Now, trial balance, if you look at, I can show it to you here. If you look at, this is something called as a profit and loss account for Indian accounting principle. Okay, look at this. Basically, what you have is debit, credit. Okay, this is going to be net loss or net profit, whatever. So this is going to be net loss, net profit out here. Now, understand this. All these things are called as line items. All these things are called as line items. Now let's go back. Okay, what is trial balance? Trial balance is nothing but list of all the accounting activities. What sort of activities? Look at the activities. Activities are sales commission, selling distribution, insurance money that they paid, general expenses, legal expenses, discount allowed, bank charges, all these items are there. Okay, all these items are given in the trial balance. All these items are given in the trial balance. So all the charges, blah blah blah, they'll give you. It can have a debit balance or a credit balance. Okay. डेबिट बैलेंस और क्रेडिट बैलेंस का मतलब होता है पता चलेगा एक्चुअली ये पे करा है ये रिसीव करा है राइट ऐसे बहुत सारे आइटम्स यू विल बी सीइंग इन द ट्रायल बैलेंस एंड देन व्हाट यू कैन डू इज you can transfer these trial balance items to your profit and loss account. Actually, there is one more account that's called as trading account. If you look at the 12 standard accounting or 11 standard, that's called as trading account. That only takes into consideration manufacturing sort of thing, sales and all that stuff. Fine. वहां से आपको फिर वो ग्रॉस प्रॉफिट वगैरह मिल जाता है, rather ग्रॉस प्रॉफिट और ग्रॉस लॉस मिल जाता है, जो प्रॉफिट एंड लॉस में ट्रांसफर हो जाता है. ठीक है. तो वो ट्रेडिंग अकाउंट करके होता है जो आजकल कोई बनाता नहीं है. पीपल डोंट मेक इट, दे डायरेक्टली kind of incorporate everything in their profit and loss statement. Fine. So this is the way you look at profit and loss statement. Okay. Now let's go back. Let's look at no, balance sheet is not a part of income statement. Balance sheet is a different financial statement altogether. So if you look at your PPT, okay, if you look at your PPT, there are components of financial statement. There are three major financial statements, rather four. Fourth one is important nahi hai, but look at this. Income statement is one, cash flow is second, balance sheet is third one. So income statement is one of the financial statement. Likewise, there are three financial statements for any company. Let's go to Goldman Sachs. Can you see investor relationships here? Now, for the fact Goldman Sachs doesn't have any sort of a products, so they will not have a website with the products. So you can directly see investor relationship, financials, as simple as that. No, only okay. So is it compulsory? So one of the students is asking, is it compulsory for every company, whether listed or not listed, to make public? No. So I'll tell you this. You have gone through a basic lecture, which is type of company, sole trading company, partnership, and publicly limited company. So a publicly limited company is a company which is going for IPO. A publicly limited company is a company who has issued its shares in the market. Now, you cannot issue shares in the market without you being, public. You get my point. You cannot issue those shares to the public, without getting listed on the stock exchange. So, if you want to issue those shares to the public, and you know the reason, because they want to get more money, so that they can grow, blah blah blah, right? So you have to get listed on the stock exchange. Then only you can issue them shares. Now, which stock exchange you want to get listed, that's your call as a company, and that's your management call. You might want to get listed on BSC, NSC. There is a Pune stock exchange also. You can decide which stock exchange that you want to get listed. Investment bankers will help you to do so. Now, if you're a public company, you have to make your documents publicly available. There is no excuse to it. You have to make those documents publicly available. Okay. In case of partnership company, it is not required. But as a publicly limited company, you have to have your documents. Every single thing you have to publish. The way I showed you SEC filing, same way in India also, you have to publish every single document of yours, wherein the money is involved, wherein the management decisions are involved. Getting my point, right? So you have to do that. There is no way out. Fine. So that's quite important. Does that answer your question? Okay. I am getting into Goldman Sachs report now, and I hope you all can see my screen very well. Beautiful. सी कंटिन्यू का मतलब होता है एज अ कंपनी यू हैव लॉट ऑफ लेट्स से तुम्हारी कंपनी है, आपके प्लांट्स है जामनगर, गांधीनगर, मुंबई, सोलापुर, बीड, आपके प्लांट्स है। सब प्लांट से आप पैसे बनाते हो, आपके 2 प्लांट आपने बंद कर दिए पर उससे आपको इनकम हुआ। यू गेटिंग माय पॉइंट, राइट? स्क्रैप रैप जो भी था आपने सेल कर दिया, you sold all the scrap everything, but you made some money. Though the business is not working, you actually got some money from that business by selling of the stuff, assets, whatever. That's what is non-continuing. And continuing that we know it, right? Okay. Wow. Whenever I investment bank, you can play with this 8K, 10K and all that. 10K are going to be 10K are mostly annual filings. 10Q are basically quarterly filings. Same format. Same format. Which one we should be following? It depends on you as a financial analyst. Let's just say if you want to analyze a company for the next quarter. Now, how many quarters are done? Jan, Feb, March, April, May. Okay, June. 2 quarters. Okay, but if you want to understand company's performance for the next quarter, which is July, August, September, then it is good to use quarterly financial statements for any sort of company. But if you're looking for a long-term perspective, and if you want to analyze company for 2017, 18, 19, on that basis, we want to check company for the next year, totally next year, all 12 months. Then you take the annual reports. Then you don't take quarterly reports. But again, it depends on you. I would do quarterly. So when I do financial modeling, when I used to do financial modeling, I would take quarterly. But actually, problem क्या होता है ना? Most of the time you have quarterly statements, then you have annually. जो adjustment होता है वो annually में होता है, quarterly में नहीं होता. So you don't want to miss on those adjustments, and that is the reason whenever you are going back in the past year, always recommended that you should be taking data which is 10K. That's the annual report, because all the adjustments. Adjustment means any sort of a business. See, you were expecting for a company to make losses, but then your company made a profit. Then you can add it back in the final this thing, budget versus actual, something like that. Okay. See, what's the name? Okay. Let's begin with Goldman Sachs income statement. See, what's the name? Consolidated statement of earning. Now, for the fact it's an investment bank, they will be having a different income statement altogether. So, if you look at as far as investment bank is concerned, they have revenues. Again, all these are revenue streams. All these are revenue streams: investment banking, investment management, commission and fees, market making, other principal transaction. That's the total, revenue. The total non-interest revenue. It's a bank. They lend money to people. They make, interest. Interest is nothing but their income, right? So total non-interest revenue. All these are the investment banking function. All these are investment banking function that investment bank do, and they make money out of that. That's what these guys are actually mentioning here, that okay, this is what it is. Then you have total interest revenue. So this is what you earned out of interest. Again, operating expenses to run the bank, total operating expenses. Then you have net earnings, pre-tax earnings, you paid tax, that's whatever. Then you have net earnings, and then you have net earnings applicable to common shareholder. This is nothing but this is what you have given the. So I hope this is clear. This was clear in the last lecture. You have this net earning, then you will give dividend to preference shareholder. I hope this is something you guys know, that the preference shareholders will be getting the sort of a dividend. These are the first guys to get the dividend. I hope that's clear. I hope that has been taught to you, right? And then the dividend gets minus from 8466 minus 569. What is left is $7,897 million, and that's where you will be actually giving the dividend to the equity shareholders. Understood, guys? Is this clear? Pre-tax earning is, it's a very simple thing. Pre-tax earning is like what you earned before paying the tax. See, look at the calculation. 36,546 is your total earning. Okay. Then minus operating expenses, right? 24 flat, 10,000, 10, 11,000 ka difference. That's your pre-tax earning. Okay. Then you have to pay tax on this. On $10,583,000 million, you have to pay tax, which is 2,117, and that's your net earning, 8,466. Okay, I hope it's clear now. Okay. Guys, is this clear? Is this clear? For the day, if you have any questions.